Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 25th, 2025, and we're diving into MillerKnoll's fourth quarter and full fiscal year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss MillerKnoll's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. MillerKnoll reported net sales of $961.8 million for the fourth quarter, an 8.2% increase year over year. For the full fiscal year 2025, net sales reached $3.7 billion, up 1.1%. John, what are your thoughts on these figures?
The growth in net sales is a positive sign, especially the 8.2% increase in Q4. This indicates strong demand across their product lines. However, the adjusted earnings per share for the quarter came in at 60 cents, which is a 10.4% decline from the previous year. This suggests that while sales are up, profitability is being squeezed, possibly due to increased costs.
Indeed, the adjusted EPS for the full year also saw a decline, down 63% to 95 cents. What factors are contributing to this?
Several factors are at play, including higher operating expenses and tariff-related cost increases. Despite these challenges, the company has managed to maintain a solid revenue growth trajectory.
Segment performance and strategic initiatives. Let's delve into the segment performance. The North America contract segment reported a 12.5% increase in Q4 sales. How did the other segments fare?
The international contract segment saw a 6.9% increase in sales, while the global retail segment reported a modest 2.2% growth. The North America contract segment's strong performance is particularly noteworthy, driven by increased demand and effective cost management.
What strategic initiatives are driving these results?
MillerKnoll has been focusing on expanding its product offerings and optimizing its supply chain. The opening of new retail stores and the integration of Knoll's assets are also contributing to their growth strategy.
Financial health and debt management. Turning to financial health, MillerKnoll reported liquidity of $575.9 million and a cash flow from operations of $70.9 million. How is the company managing its debt?
The company has been proactive in managing its debt, reducing total outstanding debt by $4.8 million. Their net debt to EBITDA ratio stands at 2.88x, which is a manageable level, indicating a strong balance sheet capable of supporting future growth initiatives.
What does this mean for their future investment prospects?
With a solid liquidity position and effective debt management, MillerKnoll is well positioned to invest in growth opportunities and navigate any macroeconomic challenges that may arise.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 35 cents for the quarter. MillerKnoll reported an adjusted EPS of 60 cents, significantly beating expectations. What does this tell us?
This is a substantial beat, indicating that MillerKnoll's operational efficiencies and strategic initiatives are yielding positive results. Despite the challenges, the company has managed to outperform the single analyst's expectations by a wide margin.
How should investors interpret this performance?
Investors should view this as a positive indicator of the company's resilience and ability to deliver value even in a challenging environment. It reinforces confidence in their strategic direction and management's execution capabilities.
CEO insights and future outlook. CEO Andi Owen mentioned being proud of the results and highlighted positive trends and solid order growth. What insights can we draw from her statement?
Andi Owen's comments reflect confidence in the company's strategic direction and operational strength. The focus on order growth and a robust balance sheet suggests that MillerKnoll is well prepared to capitalize on future opportunities and navigate economic uncertainties.
What should investors watch for in the coming quarters?
Investors should keep an eye on how the company manages its costs, particularly in light of tariff-related challenges and how effectively it can continue to drive sales growth across its segments.
Key takeaways. In summary, MillerKnoll has delivered a strong performance in Q4 2025, with significant revenue growth and an impressive EPS beat. Their strategic initiatives and financial health position them well for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing MillerKnoll's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analyses. We'd love to hear your thoughts on MillerKnoll's performance in the comments below. Until next time.